probably our most vulnerable asset. It can be pretty easily taken from us, especially if there's collusion between 2 or 3 or more employees. So one of the best weapons we have against that is reconciling the bank account. So before we get to the numbers, let's talk about a few words. Back in 2002, Congress passed the Sarbanes-Oxley Act. So now companies have to maintain a system of internal control, and they have to issue an annual report about their internal control. The auditors, those are the folks that come in from the outside, they not only look at our financial statements, they now look at our internal controls. There's a new entity called the Public Company Accounting Oversight Board to oversee these things. And as you may know, Enron had their auditors give them clever ideas to deceive their shareholders and prospective investors, and then audited the financials saying that those deceptive practices were okay. You can't do that anymore. If you're an auditing firm, you can do very little non-auditing work for your clients, and there's penalties for violators. So if officers assign financials that are misleading or incorrect, they can actually do some jail time. And what might those internal control procedures look like? We might have smart hiring practices, run background checks on folks. Be careful when we do hire them. The people that call in sick a lot, maybe they have substance abuse problems. The people that never call in sick, that never take vacation, maybe they're covering stuff up. Separation of duties. Let's not have the same person approve bills for payment, cut the checks for payment, and reconcile the bank account. Those should be done by separate people. Comparison and compliance monitoring. Let's have budgets for our expenses at the beginning of the year so we can keep our eye out for exceptions when we go way over budget. Let's have compliance monitoring. Let's have internal auditors in addition to our external auditors. Let's have adequate records. So let's make sure there's paper or electronic backup for every material amount of money that goes out. Let's use pre-numbered checks, pre-numbered invoices, so that we can see if there's an invoice missing somewhere or a check that got cut to somebody other than it was supposed to be cut to. Let's have limited access to the cash, so you need a password to get in. If people need to look at it, maybe they have authority to go into the computer system to look at the checking account, but not actually cut checks. And let's have proper approvals. Let's have a set system for how checks are cut, how money goes out, and maybe there's limits to that. Certain things can be done for smaller amounts, but you need higher and higher approval as you cut bigger and bigger amounts. And maybe our best tool for detecting fraud is the monthly bank reconciliation. So somebody other than the person that approves the checks, somebody other than the person that cuts the checks, reconciles the bank account. We open up the bank statement, and at the end of December it says, the bank tells us our bank account has $5,900 in it. We look at our books and it says $3,340. I like to say that once we tell our bank all the facts and once we tell our books all the facts they don't know, the balances should match. Well, the bank doesn't know about deposits in transit. Deposits in transit in the old days used to be checks that we had mailed to the bank. Nowadays it might be electronic transfers, electronic deposits that we made to the bank, but we made them in early January. So they're on our books, but they're not on the bank's books as of December 31st. So we have to add deposits in transit, deposits that the bank statement doesn't know about. The bank also deducted from our account $100 that another company wrote. The bank doesn't know about its own mistakes, so we correct bank errors up here and then give them a call. Our own errors will correct down in our bottom half of the bank reconciliation. That's really important. Bank errors are addressed in their part of the bank rec, and our errors are addressed in our part. Finally, the bank can't know about outstanding checks because they haven't been presented to them for payment. We know we wrote them because we wrote them down in our checkbook, but they don't know about them because they haven't been presented yet. So when we tell the bank statement all the information it doesn't know, our adjusted or correct balance is $6,260. Now we have to tell our books what it doesn't know. There's an electronic funds transfer of dividends of $900. So we invested in the stock of another company. They send an electronic transfer to our bank account of $900, and we didn't record it. So we have to update our books to reflect that $900. So let's add $900. to our balance. The next thing that happens, and it only happens in accounting class, the bank goes out and collects an account receivable for us. A customer owed us some money. The bank contacted them, collected the money, put it in our bank account, but we did not yet record it into our account. So we've got to add the $2,100 for the account receivable our bank was nice enough to collect on our behalf. Another piece of good news we didn't know about until we opened the bank statement was that our account earned $30 worth of interest. So we'll have to add that to our balance per our books. And then this next part is the hardest part of reconciling a bank account. We made a mistake. We wrote down check number 333 as if it were written for $510, but we only wrote it for $150. So we acted as if we wrote a check for more than it really was. So we have an extra $360 in our bank account. This is our error, so we address it in our section. Bank errors are addressed up here in their area, and all we do with those is call the bank and tell them about them. On the other hand, on our books, we're going to have to make an adjustment in our T account, in our ledger account, for our bank balance because we've got an extra $360 we didn't know we had. All right, that's it for the good news. Now we've got three pieces of bad news. The bank service charge, we can't know what that is until we open up the bank statement. An NSF check from D-Beat, let's call him Deadbeat. So he wrote us a check for $50. We deposited it in our bank account. We thought we had $50. Turns out it's a bad check. So we have to subtract that $50 out. And there's an EFT payment of insurance expense. So evidently we wired some money to our insurance company and we forgot to write it down in our bank account. So when you add all the good news, subtract all the bad news, our adjusted or corrected balance is the 6260 that we got when we told the bank all it didn't know. Since our adjusted balance matches the bank's, we know that we've reconciled our bank account. And while we were doing this process, by the way, we were keeping our eyes out for suspicious EFTs going out or suspicious checks being written. Now all that's left is to update our books with the good news and the bad news from our section. There's nothing for us to do up here in the balance per the bank except to call the bank and tell them about their mistake. We do have to update our books for the good news and the bad news we discovered in the bank statement. Debit cash, credit dividend revenue. Debit cash, credit accounts receivable. Debit cash, credit interest revenue. Debit cash, credit accounts payable. So this is one of the tricky ones. If we wrote a check for $150, let's say that was the correct balance in that accounts payable. We owed that supplier $150. But we wrote it down in our books as if we'd written a check for $510. That means that account payable has an abnormal debit balance of $360. So when we debit cash for $360 and credit accounts payable for $360, we now zero out that account payable like it was supposed to be in the first place. Expense or debits, expense or debits, expense or debits. Debit bank service charge, credit cash. Debit accounts receivable, credit cash. Again, that customer owed us $50. We thought he paid us. He did not. So we've got to put that account receivable back on our books and reduce our cash by $50. And finally, expenses or debits, expenses or debits, expenses or debits. So we'll debit insurance expense for $400 and credit cash. And that's it for reconciling the bank account.